I predict Costco stock is going to underperform the market over the next 5 years, but that's not because this is a terrible business. In fact, the opposite is true. This is a phenomenal business. The problem for investors today is that the stock is trading for an extremely high price, and over the next 5 years, the company's going to have to live up to that valuation. But let's dig into exactly what you need to know about Costco and the company's future. Let's start with Costco's business model. They are a membership retailer. That's really what changes the economics of retailing for Costco. You can see that in this chart right here. While Target and Walmart need to make a profit that will cover their operating expenses, Costco can essentially run each one of its stores break even. And the reason for that is that most of their profitability comes from their membership revenue. You can see that here that memberships generated more revenue than they made in net income for a long time. Now, that has changed over the past couple of years as they've gotten a little bit more profitable with each one of their stores. But when you zoom out, Costco is still a pretty low margin business, $7.8 billion in net income on $269 billion worth of revenue. Now, what makes this business model extremely sticky is that it allows for lower prices for consumers. So you pay a membership fee to get in the door, but then every single item that you buy at Costco should be lower priced than any other retailer can match because Costco is able to have lower gross margins. That combined with the buying power that they have in the market means that Costco is going to win on price. Consumers are going to come back more regularly because they're members. And this creates an economic flywheel that's the differentiator behind Costco's business model. But let's go to their performance. Because when you look long term, this is not a very high growth company. Revenue has grown at a compound annual rate of 9% over the past decade. Net income is up slightly more than that at 13.1%. So this is a very successful business. It is a profitable business, but it's not a very high margin business. And it's not a particularly high growth business. Now, when you take a look at the company's stock performance, the stock has done extremely well over the past decade, and that's in large part because of multiple expansion. You can see that in this chart. The price to sales multiple has grown at a 12.8% compound annual rate. So the multiple, just the price to sales multiple that the stock is trading for, has grown faster than Costco is growing revenue. The same can be said for the price to earnings multiple, 8.9% compound annual growth rate. This multiple expansion has been a huge tailwind behind the company's stock. Now I'll come back to that in the bear case in just a second, but valuation should be a big concern for investors. But let's start with the bull case. The bull case is simply that Costco has built differentiated economics in the retail business. I went over that a little bit with their lower gross margin because of the membership economics that they have. This is something that's not going to change. And in fact, it's going to get more ingrained in scale even further because it's going to be very difficult for any sort of retailer to catch up or play the same game that Costco is playing. Even when you look at online retail, that's not the kind of business that's going to disrupt Costco because it's not going to have the same economics as a Costco is because you have to get items from a warehouse to people's door. That's a costly proposition even for companies at scale like Amazon. So the bull case is really that the company continues to grow. Each one of their stores continues to generate a little bit more revenue each year. They're able to increase those membership prices a little bit, and they're able to make each one of their stores a little bit more profitable. I mentioned that earlier, that their profitability used to come entirely from their membership revenue. That has changed as they've squeezed a little bit more revenue out of each one of their stores. So are they going to be able to continue that? That would be the bull case, is that you're going to have increased profitability from each one of these segments. And when you put them all together, this is going to be a company that's going to be able to grow net income in double digits for the foreseeable future. But that brings us to the bear case. And any investor needs to understand why a company would underperform the market. In the case of Costco, the biggest thing to think about is simply their valuation. And that valuation in context with how quickly the company is growing is really important. As I'm recording, the price earnings multiple for Costco is 59. The price to sales, enterprise value to sales, is 1.7. I mentioned that those have grown extremely quickly over the past decade. And that may simply not be sustainable because the company's revenue is not growing at a rate that's commensurate for companies that typically trade at those kinds of multiples. This is not a double-digit revenue growth company. This is a mid to high single digits revenue growth company. And maybe they can squeeze out a little bit of margin by increasing their gross margins or their operating leverage in the business. But this isn't going to be a company that's going to grow net income or free cash flow 20, 30, 40% per year, like some companies that are trading at very high price earnings multiples. As a result, multiple compression is really the biggest risk that Costco faces in the future. Costco could perform extremely well as a business, and the stock could drop just because the price earnings multiple goes from around 60 to 30 or even 20 over the next 5 years. That is a very, very real risk, and it's not likely that we're going to see multiple expansion over the next 5 years like we've seen over the past decade. The other factor to think about is the potential that this is becoming a very saturated business. The rate of growth of the number of stores that Costco had has slowed in recent years, and membership growth has slowed as well, only about 6% over the past decade. For Costco to continue growing the business, yes, each one of those boxes needs to be profitable, but they need to keep expanding the number of stores and the number of members that they have in each one of those stores. And as the company has expanded all across the country, there may not be a lot of locations for Costco to naturally expand without going outside of their core business. And that's not really what Costco does. So you add all those things together, and I think the bear case behind Costco is pretty compelling, despite the fact that this is a phenomenal business. So I get to my prediction. I think Costco is going to continue to be a great company. The membership model that really creates the differentiated economics and store experience and prices is not going to go anywhere. And that's really the company's differentiator, whether you're comparing them to Amazon, Walmart, Target, or any other big box retailer. But the real challenge for Costco is simply that investors are paying up for the quality of the business. And that's going to be a headwind, just like it was a tailwind over the past decade. Costco trading for 50 to 60 times earnings is likely not a sustainable multiple long-term, especially if we go through some sort of contraction in the market where investors are going to be looking for values. Costco can be a phenomenal business, but not a good value. We often see this with great businesses that simply get overvalued, and they spend years, if not decades, just simply living up to the valuation that the market has put on the stock. So that's why I think investors shouldn't put expectations too high for Costco. It can be both a phenomenal business and a stock that could underperform the market over the next 5 years. But let us know what you think about Costco and the future of the stock. Your comments and research make us all smarter. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.